We are in such a crazy time in the market right now. The S&P has given some of the best returns ever and some of the worst returns back to back. We have a fear of a recession coming up, as well as the Fed just released a brand new statement on when it's planning on releasing interest rate cuts. Stay tuned, because you're going to find out in this video how this can make you super rich. Even just the fear of a recession is already starting to cause companies to delay hire and stop spending money. There are even a lot of experts saying this recession could happen as soon as this year. The Atlanta Federal Reserve predicted that this first quarter of 2025, the GDP is going to fall 2.4%. JP Morgan also has their current recession chance at 40%. Yes, the market is still above where it was last year and unemployment is still low, but by the time these two start to fall, it could be too late and we could already be slipping into a recession. On the other hand, the good news is if prices start to fall, then the Fed is more likely to cut interest rates. This cut gives our chances to make money in the market. It makes it absolutely skyrocket. Trump is also constantly pressuring Jerome Powell to cut interest rates as it helps business and it boosts the economy, but as we know, the Fed operates separately from the government, so therefore he can't actually have that much effect on what Jerome Powell and the Federal Reserve choose to do. If you want to hear more about why Trump wants the Fed to cut the rates, I'll link a video up above. It basically shows some speculation and some truth about why Trump might want rates to fall and how this is going to impact the economic future in the US. So what is the Fed going to do? Well, it all comes down to inflation. The Fed is only keeping interest rates high to keep the price of consumer goods from growing over 2% per year. The US annual inflation growth is 2.8% right now from last year, which means it's coming down but still not quite at the rate the US wants it to. So why are prices still over 2% in the past year? Well, actually, the reason is much more random than you may think. It's not from Trump or anything that he's doing, but actually the biggest gaining factor of the inflation rate right now is eggs. And as we know, this has nothing to do with the government. It's due to some bird flu that is a fluke and it's just still pulling inflation a lot higher. So that real rate is actually going to be a lot lower. And as we see, removing food and energy, which are more seasonally driven, core CPI fell from 3.3% in January down to 3.1% in February, which is a significant drop. The Boston Federal Reserve said the new proposal for tariffs will add a minimum of 0.5 to core PCE inflation, where the old proposal was going to add a minimum of 2.2. So now what you've been waiting for, what did the Fed actually tell us today? Well, basically, they didn't tell us a lot. Besides talking about how tariffs are going to possibly impact inflation, they basically said they're pushing off their decision to lower interest rates to later on to see if these tariffs really do have the effect that they're said to have on inflation. By waiting till next quarter, they're basically seeing what the effect is, getting some more data, and then making a more permanent decision on what to do with interest rates. So what does this mean you should do? Well, if there's a plan on interest rates being cut in the future, that means that in the future, the market will be stimulated, which means people are more likely to put money into it, boosting it up and making it bigger. Therefore, the time to invest is now. I recommend sticking with your disciplined investing strategy. If that's dollar cost averaging, keep with it and don't skip a month. This month, you could be buying stocks at a significant discount for them to grow in the future. With this much volatility, it's not the time to just dump all the money in, but consistently putting money in every single month is always the smart option. By mitigating risk and still maximizing your reward, this volatile market can make you a lot of money. Thank you so much for watching. If you like market updates like this, make sure not to miss out and hit the subscribe button, and I'll see you in the next one.